Let's get in Mr. Thiagarajan from Blue Star. So, sir, firstly, to start off with, Onam has just passed by. How was the demand and inquiries coming in Onam festive that we have seen? Because that also marks the start of the festive season. How are you seeing the inquiries coming in?
Good afternoon. It's a pleasure interacting with you. I think post the summer season, the demand continues to be good, and one would have expected Onam to deliver much more, but the Wayanad tragedy happened, and the mood is somewhat muted. But I am seeing great demand across all markets as we are heading into the peak festive season.
What about the inventory situation with dealers? Is it at a normal level currently, or are they highly stocked up at this moment?
They are adequately stocked. Unlike the past, most of the dealers are having extraordinary capability to manage their inventories. They have invested in their digital solutions. They can see what is the past trend. They are able to see what could be the demand. And with so many options available, they are able to regulate their inventory. It's not like those days where you carry inventory and struggle. They are well equipped now. And most importantly, you are also aware that there are power retailers like Roma, Geo, Vijay Sales. They are all managing their inventory extremely well.
Inventory management has improved quite a bit, but just coming back to the point, Mr. Thiagarajan, and hi, this is Anisha joining in the conversation as well, about the festive sales which are impending. What kind of growth should we pencil in? Because for the last couple of years, at times the growth has been 20 to 30%. There was a year that there was a growth of over 30%. What's your anticipation for festive season 2024?
Look, it's wonderful to interact with you, Anisha. The summer season delivered more than 55%. And going forward, this year has the potential to deliver more than 30% growth, full financial year. It will all depend on how the commodity prices are going to hold up and the exchange rates. Yeah, I'm optimistic that this year for room air conditioners, it could be a year with more than 30% growth.
Okay, so hopeful for a 30% growth, but as you pointed out, a lot will depend on commodity prices as well as the exchange prices. So talk to me about the volatility that we have seen in the commodity prices. Have you been able to, pass some of the increase in the prices to the consumers? Did you take a price hike, or how are you going to look at your margins from here on there?
We increased the prices. I think the entire industry increased the prices with effect from July 1 itself. And there are a few items where we do have constraints in terms of supply chain. Say, for example, copper tubes. The inner grooved copper tubes, the local supply chain is just developing. We are still dependent on imports, and the compressors are getting imported, and therefore we have to watch this very closely. And we are equipped to do that nowadays. Because post-COVID, you're aware, the commodity prices has been an issue. And the other aspect is the ocean freight. This is causing serious concern to the industry.
As per channel checks, we understand that the price hike was around 2 odd percent. Can you just confirm this? Whether actually has the company taken a 2% price hike, and whatever price hike the company has taken, will that help the company to keep its margin under the guidance that you have given earlier of 8.5 to 9 odd percent?
The price hike was around 3%. I think it has been passed on fully. There were additional costs, like I mentioned, apart from the ocean freight, consumer finance. More than 55% of the sale during the summer season was through consumer finance scheme, where the company has to absorb the interest rate. This is a new phenomenon, and in that context, there are additional costs that are coming in, and at the same time, you have to be competitive in the marketplace, and you have to manage the margins. I maintain that this year, 8.5 to 9% should be possible.
Okay, but of late we have also seen some correction when it comes to the commodity prices. Obviously, the impact of this will come with a lag to your company, but I believe by festive season that benefit should start kicking in. So, can consumers expect some discounting to come in?
See, our principle has been the same, that if there is a burden, pass it on to the consumer to the extent possible. If there is benefit, again, the competitive forces make you pass on because there are enough number of players and adequate manufacturing capacity has been created thanks to the PLI scheme. So we will pass on the benefits because that's what will be expected in the market as we try to grow our market share from around 13.75% to 15%. We need to do that.
Okay, so point taken. Sorry for that interjection, sir, but just wanted to get a better sense regarding the market share as well, because if I have it right, your target was around 15% in a couple of years. Right now, it was between 11-12% as per our channel checks. Could you update us with that number? And overall, exports, do you see a big potential there?
The market share figure that you have will be based on the retail sales. We are a big player in institutional segment as well. Blue Star has been a player in the corporate, commercial, institutional segment. And our estimate is that it is between 13.5 to 13.75%. Our goal was to reach a market share figure of to 15% by FY25. It is not going to happen in FY25. It should happen in FY26. So as I had shared earlier, we have to grow profitably. We are not interested in buying market share. We have to deliver the margins, and we have to maintain our return on capital employed, especially when we are investing in manufacturing in a big way. And therefore, the market share goal of 15%, as of now, I am saying that it may happen only in financial year 2026.
Moving on from the from the AC division to the EMP division of the company. Now, what we have seen is in the first quarter, you have reported a stellar set of numbers. The margins were as high as around, I believe, around 9.9%. Will the company, in fact, can the company report these kind of sustainable margins even going forward?
Good question. That segment, comprises, apart from electromechanical projects, also the package air conditioning or the commercial air conditioning business. So whenever there is an equipment sale that is very high, that margins are possible. And also, there are certain projects which are high margin projects or short turnaround projects, then this kind of margin can happen. So we have maintained that the margin for that segment should be between 7.5 to 8%. By chance, there are projects which are getting close to faster, you will be able to deliver higher margin.
Okay, so that's the latest coming in. Thanks, Mr. Thiagarajan, for making time and speaking with us. But just one last more question since we have you with us. What's the overall potential of data centers, factories and railways? Because these have come up as those new deployment areas apart from RACs or the room ACs as we call it. What about the industrial side of things and data centers and GCCs, etc.?
Anisha, the electromechanical projects or commercial air conditioning caters to numerous segments. So at the lower end, it is shop, showroom, boutiques, where you sell equipment, and that segment is growing, driven by the demand in tier 3, 4, 5 towns. In the project side, there are buildings, there are factories, there are data center, there are large infra projects like metro railway or water or airports. Now, the infra projects take a long time to execute, and obviously, they're all tendered projects, highly competitive, and the cash flows may not be attractive. But data center, manufacturing, these sectors are growing sectors, and we are seeing more than 25% growth in that sector. A lot of orders are getting finalized. There are fast track projects, quite a few, and the margins are attractive. Cash flow is attractive. Commercial buildings is somewhat muted. I don't think significant things are happening, but it goes through a cycle. Shop showroom boutiques are doing extremely well.
Okay, so on that note, we let you go. Really appreciate you making time and speaking with us all the way from Spain. I know you had to get up early for this, so thanks so much for making time and speaking with us today.
Thank you. It's a pleasure interacting with you.
Okay.
If you like this video, then like, share and subscribe to ET Now.